Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone for supporting the channel, all the viewers, all the subscribers. Immensely appreciate the support. Today I want to do a follow-up video on a video I put out about 2 weeks ago, passive income trading options. There were a number of viewers on that particular video wondering exactly what the whole rationale was behind jumping into that particular swing trade, which was with AT&T, the stock you see up on the screen. And then how am I making passive income, or essentially getting paid to sell off that stock in a positive swing trade? So I thought I'd kind of go through it in a little bit more detail, explaining the rationale behind the trade. Just to remind you guys, let's go to the bottom here to show you that trade for full transparency here. If we take a look down the portfolio, you can see on April 26th here, a very large trade, 500 shares, 32.87. Total equity value of this particular swing trade, $16,427.50. If you take a look back at the main page, I now currently have 795 shares, $25,678.50. So the whole rationale behind jumping into the swing trade was on this 5-year graph here. You can see it a little bit more clearly. There's been a few times where this stock has pulled back quite dramatically here. Back in November 2016, back in November of 2017, and then most recently in April, May here, dipping down. I think this is a very good stock for a longer term buy and hold. I think it's also reasonably valued. You can see the PE ratio, 6.515, which is a very good PE ratio for telecommunications, really for this entire market segment. It's got a great dividend yield, 5.067. A very large company as well, the largest telecom in the United States, $198.5 billion. As you can see on earnings as well, earnings have been fairly stable, as well as increasing over the last few quarters, Q3 2017 all the way through Q1 2018. You can see there will be another earnings report here, July 24th, after hours. So the reason I jump into this stock, I think it's reasonably valued. I think it's going to jump up here over the next few months or so. And the way that I've been making extra income on this particular stock is by selling off options on the shares that I hold in the portfolio. So for example, I would be more than happy selling the stock off, let's say at $35. So instead of just putting in a trade, sell, and then putting in a limit order, which I've went over in a number of videos as well here, for $35, and then specifying the number of shares that I would be willing to sell, let's say 700 for example. So instead of doing it that way, you can go ahead and just do a trade with an option. So you can do trade options, and then you'll want to basically do the sell, call. And you can see here there are a number of different dates in which this particular contract will expire. But you're essentially putting in a limit order that will expire on each one of these particular dates here. If we take June 22nd here, for example, let's say we want to sell the stock off for $35. We'll go ahead and click on that $35 sell option, put in 7 contracts, which is 700 shares. And now you see for that same exact swing trade, we're going to be paid $168 for that trade. What I've been doing is a little bit less value, but shorter term. So for example, next week, May 18th, let's say that we put in a sell call for $33. Again, now we'll be paid to put in a limit order. So let's say we want to sell off 700 shares. We're going to make $70 on that particular trade. So if the stock gets up over $33, we'll have to sell the stock off for $33, but it's still a positive swing trade from where I bought the stock. And if the stock does not get up to that particular amount, you still keep that $70. Then you can simply go back and buy another call for May 25th here. So you can put in an additional call, $33. This value will be a little bit less at that point, but again, you will make another $70 to $100, for example. If the stock does not get up to $33, you simply keep repeating this over and over again. So every time you're putting in a limit sell, you're actually getting paid when you do it as an option. So that's what I've been doing with AT&T. Let's go to the bottom here to show you the income I've made so far on this strategy. The first trade you can see here on the bottom, April 23rd, a call sell, $427. I got $100 for that trade. The stock did not hit $35, so I kept it at $100. Put in an additional sell call here as well, May 3rd for $10. And then also way up on top there, May 8th for $21. So I've essentially made $131 by simply putting in limit orders that have not executed. So that's how I'm doing my swing trades with covered calls, selling off call options. And this stock is also a very good buy and hold stock. So if you can't get out of these trades, you're still making passive income on all of those sell call options that you are buying, essentially limit orders, getting paid for limit orders, but you're also collecting a very good dividend, 5% dividend. And since that you also think the stock is undervalued, buying on the dip here, it's also a very good stock to make some capital appreciation. So it's a great swing trade stock. It's a very good buy and hold stock if you can't get out of a swing trade. And by doing limit sells via call sell options, you're also making passive income on your trade as well. So that's why I jumped into AT&T. Again, the reason I jumped in because I think the valuation is good. Buying on the dip here, I think it's a good long-term buy and hold stock if you can't get out of a swing trade. Collecting a 5% dividend, very, very valuable stock. Holding for the longer term, undervalued as well with the PE ratio of only 6.515. And then by doing sell call options instead of limit orders, you're essentially getting paid for a positive swing trade. So if your trade does execute, you still keep that money that was paid to you for the limit sell order via the call sell option. You still get a positive swing trade, and then you can use that capital to essentially repeat that process again. So that's the whole rationale behind jumping into this particular swing trade. Jumped into a swing trade and a very good buy and hold stock, a stock that is essentially on a dip here, very good valuation, and a stock that you can keep longer term as well to collect a very good dividend and sell off call options to make passive income on the investment as well. So I hope that makes sense. If there's anything that you guys don't understand, please let me know in the comment threads down below. I'll do another updated video, but that's the rationale behind jumping into AT&T on this particular swing trade. So again, just wanted to reply to a few investors on the channel, new viewers on the channel, wondering exactly what the whole rationale was behind putting in quite a bit of capital into AT&T. So that is the rationale. Blue chip stock has a great dividend, a safe dividend. It is essentially on a dip. I think there is a lot of value jumping into the stock right now. If I can't get out of a swing trade, I'll hold it for the dividend. If I can get out of a swing trade, great, I make a positive swing trade, and I can also sell off covered calls to make some passive income while I wait to get out of a positive swing trade. So that is the idea behind it. Please let me know if you guys have other stocks like this that you guys are utilizing in a similar strategy, or is there a better way, more efficient way of doing this type of strategy? Either way, let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So not to make the video too long, I'll kind of end it here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. And until the next video, we'll see you then.